So today we want to go through topic 3, multiple choice questions. Topic 3 is for the books of original entry. And these questions we're going to go through are similar to the CSEC questions. By the way, you could either pause the video, try the question, and then look at the explanation, or you can go to the description. I have the 5 questions listed there. So you can try the questions before you even look at the video. So first question, XYZ bought goods for $900 on credit. Which book of prime entry will this be recorded in? Answer here is B, right? So it will be recorded in our purchases journal, which is also called our purchases book. Why do we put it in our purchases journal? Well, the only book used for goods purchased on credit is our purchases journal. And you want to make sure you understand the purpose of each of the 7 books of original entry, also known as the books of prime entry. Now, this is tested regularly, so you want to make sure, as I said, you want to make sure you are familiar with the purpose of each of these books. Let's look at the purpose of the other 3 books that we mentioned. The sales journal, aka the sales book, make sure you know the nicknames as well, is used for sale of goods on credit. Not the sale of a motor vehicle, not the sale of unused furniture, only the sale of goods that you're reselling then, right? Only the sale of inventory on credit goes in the sales journal or the sales book. The general journal, this is used for transactions that don't fit the criteria for the other books. So there are 6 books that are very specific. If something doesn't fit into those 6 books, then we put it in the general journal. And the last one in this option is the cash book. This is used for cash transactions, so cash purchases and cash sales. All right, so again, number 1 is B, purchases journal. Number 2, it says the petty cash float at the beginning of the month was 200. During the month, 175 was spent on various expenses. What amount should be reimbursed to the petty cashier at the end of the month? So how much money we giving back this petty cashier after she spent? The answer here is A. Why did I choose A? Well, the rule states only reimburse what was spent. Only reimburse what was spent. I hope you guys have your pen and your paper and you're taking notes of all these rules, right? When we reimburse the petty cashier, they should have the same amount of money they had at the beginning of the period. We don't want them to have more. We don't want them to have less. I want to make sure you give them only what was spent. This ensures the petty cashier doesn't have more than the maximum limit, which is usually what they start with at the beginning of the month. So after expenses, in this case, we're going to have a balance of $25. 200 minus 175 is $25. If we reimburse them at anything more or less than 175, the petty cashier will not have the $200 limit that they're supposed to have at the beginning of the new period. So, hope you got that note, and I hope you understand why I choose A as the answer for this question. Number 3, the total in the purchases book signifies total what? Is it credit purchases? Is it cash and credit purchases? Is it all items purchased? Is it cash purchases? What does the total in the purchases book tell us? We spoke about this earlier, so if you didn't understand what the purchases book or the purchases journal is used for, chances are you would have also gotten this one wrong as well. So again, ensure you know the purpose of each of the 7 books of original entry. It's one of the things I can't stress enough in our classes. Make sure I run through that with all of my students. The answer here is A. The purchases book is used for goods purchased on credit, aka credit purchases. Now they try to be a bit tricky here by leaving out the word goods, right? Credit purchases of goods. That would have been a better phrase to use to make it a little bit easier for students. But none of the other options match because we know The purchases book only credit purchases of goods for resale. So option B is out because that has cash and credit purchases. Option C is out, that has all items purchased, and that is not what the purchases book is for. And option D says cash purchases, so that is also out. So when it comes to doing a paper one questions, you sometimes have to use a little bit of critical thinking. Sometimes the answers are not very straightforward, so you have to read between the lines more or less, like in this case. So that's option A is the answer for number 3. Congratulations, we have 2 more questions to go in this video. How many you got correct thus far? Let me know in the comments. Let's shout out all of the persons who got 3 out of 3 so far. So drop me in the chat if you got all 3 correct. If you didn't get 3 out of 3 again, I hope you guys are taking notes of the info that I share. It's a really good idea to put these questions that you get wrong, put them on a flashcard and use spaced repetition to help you remember the information. If you don't know what spaced repetition is, if you don't know anything about active learning strategies, if you don't know what is the biggest mistake students make that prevent them from passing POA, then you most definitely need to check out the free training I did for you on this. I would have a link in the description, so go check that out if you want to catch that free training. Number 4, let's move on. This question says, Carl received an invoice for $5,000 less a 25% trade discount. Later that week, he returned 1/5 of the goods. What amount will be entered in his returns outwards account? What amount will be entered in his returns outwards account? Answer here is C. How did I get C? Why did I choose C? So let's run through this. The amount to be recorded in the return outwards account is the amount owed for the items returned. Let me say that again for those in the back. What you put in your return outwards account is the amount that is owed for the items that were returned. That is also what you would have paid for the items at the due date if it didn't bring it back. Let's calculate how much you owed for the items you returned. So we have 3 steps. You're going to take them one at a time. Step 1, you want to calculate your trade discount. I show all the ways in my classes, but I'm going to give you guys the most basic way here. We take the 5,000, that is the original amount of, or the original value for the items. Multiply that by the discount, which is 25%, you're going to get $1,250. Step 2, calculate the total amount owed for all the items. How do we calculate that? We take the original price, we take out the discount, and you get the amount that is owed for the items that he took on credit. Step 3, we calculate the amount owed for the items he returned. So you're going to take the amount owed, which we calculated in step 2, right? That is the price after the trade discount. And we're going to multiply that by what I call the return factor. Now, sometimes this could be a fraction, sometimes this could be a percentage. Sometimes they even actually tell you how much individual items are really returned. If they give you a fraction or percentage, we use this formula, amount owed by the return factor. So the original amount owed was $37.50. That would have been for everything that he took. But he returned 1/5 of that. So we take the $37.50 and we multiply that by 1/5. That is going to give us $7.50 as the answer. That is the value that he would have had to pay if he did not return 1/5 of the goods. Yes? So you get that answer for number 4 is C. Let's move on. And of course, if you have any questions, drop them in the comments. I'll try to get to those questions, any comments as soon as possible. But the best way to get all of your questions answered would be to be in our classes. Number 5, PQR Limited offers a discount for prompt payment to a customer. Under which column in their 3-column cash book would this be entered? So where do we record this discount? Do we put it under our cash? Sorry, do we put it under our bank column? Do we put it under our cash column? Do we put it under the discount allowed column and the discount received column? If you even know a little bit about cash book, I think you should already disqualify EMD because a discount supposed to go under the discount column. But which is it? Is it C or D? Is it the discount allowed column or is it the discount received column? Well, the answer here is C. Why? Because this transaction deals with a customer and the discount which relates to a customer is a discount allowed. Please make note of that. Customer equals discount allowed. A discount received is a discount given by a supplier. Another key term here is offers. This helps us recognize that PQR is the one who is given the discount. PQR cannot give a discount to their supplier. It doesn't work like that, right? So one of the hacks that I use when I was studying POAs, I would try to figure out who is giving the discount. And that helps you choose whether it's a discount allowed or a discount received. If it is a business supplier giving the discount, then that's going to be a discount received. If it's a business giving a discount to their customers, then that is going to be a discount allowed. We are at the end of our 5 questions. Congratulations, you made it to the end of this video. We would have covered 5 questions which every POA student must be able to answer. And these questions are similar to the CSET questions you will see on your paper 1 past papers. All right. Let me know in the comments. Was this helpful? Do you want more questions on this topic? Which topic would you like me to do questions on? Just drop all of that in the chat. And don't forget to subscribe. If you did not, it doesn't cost you anything to subscribe. And you would actually be doing other POA students a big favor when you subscribe. And when you like, because the YouTube algorithm is going to push the video to more persons when they see persons subscribing and liking. Subscribe, like, comment, and of course, share.